Jaffray, Asia Securities principal sales trader. Andrew Sullivan joins us live from Hong Kong. Hello, Andrew. Thanks for joining us.
Pleasure.
Andrew, you say buy the stock. It's down as much as 15% today. Why buy it?
Well, certainly when it opened and was down 15%, I think that's probably too much of a knee-jerk reaction. I mean, as we go into lunch, it was down about 11%, which is probably more reasonable, but still probably an unfair discount, because Sun & Kai is so much more than just the two co-chairmen. And we're also aware, they were presenting recently at a conference and pointed out that they've already locked in a lot of this year's sales gains anyway. So I think they have a target of something like 32 billion. They've already locked in 28 billion of that. So whatever really happens from this investigation, and we're still not exactly clear what they're being investigated for, it's not really going to affect their profitability this year, I don't think.
So, Andrew, you don't think the shares have too much further to fall then?
I mean, I think, you know, with all the uncertainty, a 10% correction is maybe not unreasonable. But as I say, we don't know the full extent of it. And that's what's worrying the market. I think as more news comes out and it becomes clarified, I think you'll probably see these shares rebound just because of at the moment, a lot of funds will have come out of it just because for ethical reasons they have to. And I think that's a lot of the selling that we saw this morning, and a lot of uncertainty. But as people get more and more information, then they'll go back to recognising that Sun & Kai is probably one of the best run developers that we have in Hong Kong.
Does it put the spotlight, Andrew, on some of the other developers, Chung Kung and Hutchinson maybe?
Well, it certainly puts, I mean, what we're hearing so far is this is possibly to do with farmland purchasing and conversion. And 4 of the big 6 developers here have those sort of land banks. And that's really, yes, Henderson, Chung Kong, Sino, and possibly even Kerry Properties will be looked at carefully, I think, in the short term.
Does it damage, does it add to fears, Andrew, that there's a bit of a collusion going on between the business community and the government? I mean, could that damage the investment prospects of Hong Kong, or do you think that's not the case?
Well, I think it's probably the other way around. I mean, I think the fact that we have an ICAC that is prepared to go and investigate, you know, some of the richest people in Asia over possible corruption, I think shows that the standards being operated in Hong Kong are actually very high. And certainly with the recent scandals that we've had over accountancy out of firms out of China, I think it probably puts Hong Kong in a very good light. That said, I mean, the developers have always had a strong hand here because of the city's reliance on them developing property for the population. So I think that both of those things is true, that there has been a collusion because the government has had a very small part in building property here, whereas the developers have had a very large stake.
Andrew, got to get your take on equity markets. It's been quite a quarter, hasn't it? The Nikkei 225 up by 19%, the Hang Seng up by 11%. Best quarter for Chinese equities in a year, although the Shanghai Composite is down by 8% in March. What do you reckon from here, Andrew? Are these sort of gains sustainable? Which market do you like at the moment?
Well, I think the valuations are probably a little bit rich at the moment, and I think that's one of the reasons we've seen the markets paring back over the last few days. As companies have reported, people have just seen that the price rises in the stock prices has actually probably overrun the reality of the fundamentals. Going forward, I mean, I still like China. I mean, it's still going to see growth going forward. There's still plenty of opportunity there. Other markets around the region are very much connected to what's happening on the global market, as is China to an extent. But I think the benefit that China has is, they have the opportunity to put more stimulus in place. They've still got big building programs on their infrastructure, and they're still trying to convince their population to become more consumer orientated. And even if they're only able to do part of that, I think a number of those consumer related and infrastructure stories are going to run very well for the rest of the year.
Andrew, thanks for joining us today. Andrew Sullivan there, Piper Jaffray, Asia Securities principal sales trader.